The other liability with known amount, the last part is current portion of long-term debt. So which is the also called the current maturity or current installment. So you, for example, you applied for loan for $1 million, you received it, and every year you are paying 1,001, 100,000, right? So every year the current portion or portion of long-term debt is due. So its life is less than 1 year, right? Its life is less than 1 year, right? So that become our current liability. So amount of principal payable within 1 year, right? Also company reclassifies amount for the long term to current as well. For example, at the end of 8 years, outstanding balance is 200,000. So you decide that rather to pay in 9th year and 10th year, you retire 200,000 at once. That also becomes the current liability because you are retiring it with less than 1 year, right? And then current liabilities that must be estimated with known, we just found out the estimated the current liabilities with known amount, and then current liabilities with estimated amount. So estimated amount are estimated warranty payable and contingent liabilities. You don't know, some kind of natural disaster can occur, earthquake can occur, right? There's a rule that called riot in a country like what's going on in Hong Kong, right? So this can be, be done through different techniques, and then we categorize it under current liabilities that must be estimated. So warranty payable, warranty period may extend to 90 days to a year. So in that 90 days, anyone can claim the warranty, and it has the expense, right? And when they apply for warranty, then you are liable to pay them. So that become your liability. But you don't know how many and how much would be the amount, right? So company must record warranty expenses in some period that business record sales revenue, right? If warranty is for this year and or for more than 1 year, like within 5 years, so then whenever the warranty is applied, so that expense would be belong to that year. For example, a car warranty for like 3 years, and you purchase the car in 2019, it's 2020, and you apply for warranty. So you applied in 2020, so that would be your warranty. So warranty expense goes to income statement for 2020, right? Just remove it. So contingent liabilities. So these are partial liability that depends on future outcome of past events, right? And how we gonna use this accounting for this one? So first, let them occur. Normally we disclose it into the notes of the balance sheet, and the third one is we don't report it, and we wait it occur, and then we record it, right? The number one is that we make some kind of reserve, it accrue, like we made some kind of reserve for bad debts or uncollectible in our discussion for treatment for accounts receivable. One is we disclose it. If 20 people apply for warranty, that would be the cost. If they applied it, that can be the cost, and that may go to the income statement, and they may reduce the profit by this much amount, right? You can disclose it, or you can avoid it. If that happened, then you say that okay, this 20 people applied and this was the expense. So we have the example here. Just pause the video and read the question, and then we solve it together. Here we go. So Black and Decker, which manufacture power tools, made sales 100,000 subject to product warranties. Assume that in the past year, 2% and 4% products proved defective, right? So between 2 to 4% are defective. So Black and Decker could estimate that 3% of sales will require repair or replacement, right? So what is the warranty expense? Warranty expense would be 3% to warranty payable here, right? So their warranty is from 2 to 4%, but they assume that on this sale, let's estimate that it's 3%. So 3% is here. So warranty expense, it will go to income statement. Warranty payable, it will go to balance sheet, right? So assume that defects up to 2800 and the Black and Decker would replace the defective products. Then the entry would be, what is the entry? Entry is that you replace the product. Entry would be that the warranty to inventory. Why? Because you replace the goods, not you did not pay them cash, right? It's like exchange of the goods, and exchange of the goods through inventory. Asset decrease, it's credit. Warranty or liability decrease, it's debit. So here we go, we have still balance of warranty payable 200, right? And then contingent liabilities. So we use normally probability. So there are some probabilities or reasonable probabilities removed. The accounting is that if the probability is high, then we can use it as accrue. If it is reasonable, possibility, because in this area, for example, in this time period from June, July, August, there are going to be heavy rains and there are going to be flood chances, right? From the last 2 years, the flood is coming. Flood destroyed the forest trees and all the stuff. So we may be affected. So there are high chances. It's probability. If from the last 2 years, 3 years analysis says that the rains are still there, but there is no flooding, but it may happen this time. Why? Because the environmental department has said that this time there are going to be heavy rains and there are chances of flood. So you have reasonable probability to believe that, so you disclose it into the notes of the balance sheet. And from the last 10 years, rains, even the heavy rains, there is no flood came, and through the analysis you find out that okay, but now this, for example, the area is cleared for flooding. There's going to be no flooding, even there's going to be heavy rain. Chances are minute 1%, 2%. Then basically you do not include it. Then it's basically an extra information for you. Okay, we have successfully concluded the plant assets, in which we talk about the long-lived assets or fixed assets, and then we talk about liabilities, and which part of liability? Only current liabilities. The long-term liabilities we will discuss in our next lecture. So I'm going to be uploading assignment 7 into the group and also in the Blackboard discussion forum. So please respect the due date. We will be having a Zoom live session as well for this week as well, most probably on Friday, in which we talk about the pattern of the final exam as well. Okay, that's all for today's lecture. Hope to see you again for our final lecture. Until then, take care. Bye bye.